Halving will affect Bitcoin price very much. All investors are expecting a rise and want to capitalize on it. But in the market, there are more and more warnings about the crash and talk that now is the best time to sell everything and wait for new opportunities. Is that really the case? Subscribe to the channel and let's get to the bottom of this. A small reminder that the forecast made by 10x Research, which is scaring a sideways trend for the next 6 months due to the fact that miners were forced to sell $5 billion worth of cryptocurrency. And the very next day, they made a statement that they sold all their assets because of the threat of a big market crash. What frightened them so much? That steady inflation will prevent the Fed from lowering rates, which is the main growth factor for risky assets. Investors in the S&P 500 and Bitcoin are waiting for the U.S. financial regulator to stop drying up the markets and return to the printing press policy. But in the current situation, with official inflation at 3.5%, the Fed is forced to keep rates at 5.5%, and the yield on 10-year T-bonds is at 4.6% and has been rising since the beginning of the year. We'll have to wonder how the regulator will behave and whether it will cut rates. And if they don't, then what will happen to risk assets? Let me tell you about a rather interesting study from Bank of America. At the moment, the U.S. spends $1.1 trillion a year on servicing the national debt. That is, these are payments on current Treasury bonds that have matured. If the Fed does nothing with the rate, this amount will grow to $1.06 trillion at the end of the year. And even if the Fed reduces the rate by 1.5% from current values at once, at the end of 2024, the national debt service will amount to $1.2 trillion. This is a very large sum that forces the U.S. to borrow more and more to pay old bills, and the Fed can solve the situation by lowering rates and let the financial markets breathe easy. But 2024 is also the time of the presidential election, so the regulator prioritizes the fight against inflation, what the head of the Fed, Jerome Powell, reiterated recently, and the voters will pay for it, who will have to solve the problem of the national debt in 2025 from their taxes. I'll attach a quote. Recent data show solid economic growth and continued strength in the labor market, but also no further progress this year towards our 2% inflation target. That is, the Lord of the printing press sees that the recession has not come and people have not been laid off en masse, which means that the Fed can stay calm for the time being because a high interest rate will hurt the economy, and their main pain of inflation is not going anywhere. This means that the continuation of tight monetary policy really makes sense. In such conditions, it's really hard for the markets to wait for good news from the Fed. Therefore, at the next meeting of the regulator, the probability of keeping the rate at the current level is 98%, and the first reduction is now expected no earlier than September. Are the guys at 10x Research right when they say we should sell everything now while it's still expensive? Only time in the market will tell. But I would like to point out that despite the Fed's tight monetary policy and the continued shrinking of the regulator's balance sheet by $1 trillion over the past 12 months, there has been plenty of liquidity in the markets. Therefore, the S&P 500 and Bitcoin hit all-time highs, and the only reason that could send risky assets into a correction was geopolitics, which broke into the chat room with the escalation of the conflict in the Middle East. Thus, we have a good chance to cope with fears of Fed action and a decent pass through the Bitcoin halving to see a new high in price. What the market will be like after the halving we'll discuss further, but for now, I'd like to ask you to subscribe and like this video to see quality analytics and the most important information. Back to the first fear from 10x Research. Miners will stage a $5 billion sell-off, and Bitcoin will be stuck in a sideways pattern for 6 months. They make an analogy with the halving in the 20th year, when we actually traded for 6 months in a narrow range after the previous halving. And only then the parabolic growth started before the first peak of the last cycle. But it's important to realize that Bitcoin price behaves differently just before and after the halving. We need to consider that this will be the first time in the history of the first cryptocurrency when the new high was set before halving. And also, the current mining market has changed a lot in the last 4 years, and now the main players are public companies that use a completely different approach to financial planning. They could already realize the necessary amount of cryptocurrency at prices around $70,000 to accumulate enough cash to continue working in a case of a correction after the halving, and also to invest in the installation of new equipment to continue to quietly make money from mining cryptocurrency. And as the mining company Marathon stated, they are already prepared to halve the block reward and will remain in profit even if the Bitcoin price drops to $46,000. If we talk about whether there will be a correction after the halving, it will not depend on miners or even the Fed. Provided that geopolitics leaves the markets alone, investors will primarily look at the recovery in demand of spot Bitcoin ETF. That is, they should be in the plus again, and there should be no outflows specifically from the BlackRock and Fidelity funds. So far, we've had our third red day in a row. This is largely due to the fact that BlackRock has not been buying for the last few days, and the other funds, except Grayscale, are just standing still. As for the Hong Kong ETF launch, they start a week or a week and a half after halving. And I can't know ahead of time. Are the Bloomberg guys just catching up on FUD, or will the outcome of these funds turn out to be really weak? But we can emphasize the point that this is a potential growth point in case of high demand, and it would be great if the Chinese media reports that the authorities are not against such investments. I'll keep an eye on the situation and share the news with you. What is the forecast for Bitcoin in general after the halving? If we take into account the reduction in issuance and the recommendations of investment giants like BlackRock to allocate about 2% of the deposit to cryptocurrencies. Analyst Willy Woo estimates that with this approach, Bitcoin investment should grow to $2.5 trillion. Such an influx of funds would correspond to a capitalization of $1.8 trillion in a bear market and $12.8 trillion in a bull market, and the price accordingly should be between $91,000 and $650,000. Depending on the scenario. And here's one of his predictions where he signals a local bottom, and that we should now bounce off of it. We'll soon find out how the indicator will work, but I can say for myself that judging by the chart, the situation with the correction has noticeably improved, and now Bitcoin has a chance to return to $66,000, canceling the local downtrend and continuing trading inside the pattern, unless geopolitics strikes again and BlackRock stages a sell-off. This is not financial advice, but I will wait for an upside exit followed by an update of the current high. Be sure to subscribe to the channel if you're new to me so you don't miss the updates. And for regular viewers, please support the channel with a like. Thanks for watching.